Today we're looking at 2023 real estate predictions, and these predictions are based on Redfin's latest report. And I'm going to be going through with my assistant Emma. There are 12 predictions, and I'm going to let you know whether I agree or disagree. Redfin has predicted that mortgage rates will take center stage in 2023, with high rates likely to make it the slowest housing market year since 2011, according to their end-of-year predictions. So we're just going to jump right in. My name is Amy Brown. I'm a realtor with Compass, and this is my daughter/assistant Emma, and we're going to go through their home predictions. Number 12 to me is very interesting and a little controversial, so stay tuned because you want to hear number 12. All right, Emma, what do you have for me?
All right. Prediction 1. Home sales will fall to their lowest level since 2011, with a slow recovery in the second half of the year.
Okay, I'm going to say yes. I definitely agree with that statement. I'm tracking the number of closed sales. Still waiting for inflation to drop. Interest rates have gone down, but they need to go down further. So as soon as they do, the market will start moving. The market will pick up. So I would say there'll be a recovery in the second half of the year, and the first half will be slow. But there's a caveat. Inventory is still historically low. So it just makes for a really unique and interesting time. Once the interest rates lower, the buyers that are waiting on the sidelines, they are going to come back. They are going to buy, but we still have a low inventory situation. If a home right now looks good, has been staged, and is priced correctly, it still sells. So it's an interesting time.
Mm-hmm. Prediction 2. Mortgage rates will decline, ending the year with below 6%.
Okay, so ending 2023 below 6%. I mean, we're about there now. We're close. And as soon as inflation cools down, I'm hoping, I don't know if I can predict this, but I'm hoping we'll be right around the 5% as the rates align more with inflation.
And prediction 3, home prices will post their first year-over-year decline in a decade, but the U.S. will avoid a wave of foreclosures.
This is also an interesting topic because we're talking on a national level of what's going to happen. So I would agree on a national level that there will be a year-over-year decline. However, we all know that real estate is hyper-local. Real estate changes depending on the city, and it can change depending on the block that you're on. So this is really difficult to accurately discuss this particular topic. My prediction is that prices are going to remain stable, and that's going back to my earlier point of low inventory. So the prices aren't going to be crashing down when we still have a lack of updated homes that are priced appropriately. We still have buyers out there waiting to re-enter the market, and I think they will, and I think they'll be a little bit disappointed based on the lack of inventory. I'm not predicting a wave of foreclosures. The only way I could see that is if somebody bought in the height of the market, maybe 2021, 2022, in the crazy times, and they put very little down and they had to unexpectedly sell. They could be in a bit of a bind, and it could be a short sale situation. However, most of the homeowners across this nation have a large amount of equity, so I'm not expecting to see a wave of foreclosure. So I would absolutely agree with point number 3.
Mm-hmm. Prediction number 4, Midwest Northeast will hold up best as overall market cools.
I agree with the Midwest. I think and you can hear my Midwest twang, I'm originally from the Midwest, is very stable compared to the coasts. The West Coast, the East Coast, the Midwest has always been more stable, always been more affordable. So it didn't have the crazy price increases, the rapid increases that the coast did. So yeah, I would agree with that. The Northeast is a little bit of a different animal. I don't know how stable that is going to be. I think a lot of people during COVID, they were shut in their houses, just a human psychology. They realized they didn't want to live in snow anymore. So I think we're still going to have people from the Northeast moving south.
Prediction number 5. Rents will fall and many Gen Zers and young millennials will continue renting indefinitely.
Boy, that's a tough one. Renting indefinitely. I'm not sure about that. I don't know that I would strongly agree or disagree. I don't think rents are going to change significantly. I think there's still a huge demand for people needing to rent because of housing prices still being so elevated. But I would hope that the Gen Z and the millennials will see the value of home ownership and building wealth over years with residential real estate. So I'm going to be optimistic, and I'm going to say I hopefully disagree with them renting indefinitely, and I really don't see rents falling a tad, but not much.
Prediction number 6. Builders will focus on multifamily rentals.
I would agree with that. Builders are for-profit corporations. They are going to do what's in their best interest, what is most profitable. So, yeah, I could see them right now choosing to build apartment buildings, luxury apartment buildings, rather than single-family homes right now in the current market.
Prediction number 7. Investor activity will bottom out in the spring, then rebound.
I would agree with that. I think a lot of home investors, house flippers, if you will, were caught in an unfortunate situation when the markets change so rapidly. So I think those investors are right now liquidating those homes and getting them off their books. So I think the second half of the year, they will come back into the market because that's what they do. This won't put them out of the market totally.
Prediction number 8. Gen Zers will seek jobs and apartments in relatively affordable mid-tier cities.
I agree with this statement if they're allowed to work remotely. I could see it makes a lot of sense to move away from the expensive coasts, from the high-priced cities, from LA, Manhattan, Miami. That makes a lot of common sense, especially with younger people not wanting to work as many long hours as other generations. It is less expensive to live in the Midwest, for example, but I'm just not sure if they will be allowed to permanently work remotely, or I just don't know where that trend is going to end. So that's a maybe on prediction 8.
Prediction number 9. Migration from one part of the country to another will ease from the pandemic boom.
Yes, I agree with that. There were many people during the pandemic that moved to the sand states, where, Texas, Florida, Georgia, Arizona, you name it. And I think they moved. They are still moving, but I think the majority of those people have made their move. So I think it will slow down. I don't think it's going to completely slow down, though. So I agree. They use the word will ease from the pandemic boom. Yes, I would agree with that it will ease, but it's not going to stop.
Prediction number 10. Rising disaster insurance costs will make extremely climate risky homes even more expensive.
Absolutely, 110% yes. You've seen on the news, you've seen the hurricanes, you've seen the tornadoes, you've seen the ice storms, and, it's really difficult working with insurance companies having to completely rebuild a home. I would think fewer buyers would want to live in areas that are known and highly susceptible for this higher risk. And also, the cost of insurance, I think, moving forward 2023 and beyond is really going to impact where people move. It's been an issue up until this point. I think it's going to be more of an issue going forward.
Prediction 11. More cities will follow Minneapolis's YIMBY example to curb housing expenses.
I don't know. I just don't know if that I'm not necessarily going to agree with that. What Minneapolis did is what it stands for is yes in my backyard. They eliminated single family zoning only to help alleviate and address the housing supply and demand. There are a lot of people in the downtown area, workers that can't afford single family homes. So now these areas are going to allow duplexes and triplexes, and hopefully they'll get some more affordable housing and people will have some options. Will this be a national trend, what Minneapolis did? I doubt it. I don't see it. Maybe. I hope so, but I don't think so.
Prediction 12. Buyers' agent commissions will rise slightly as fewer agents broker fewer deals at lower prices.
Boy, I think commissions are going to stay steady, so I would not agree with that statement. They did say slightly. They said will rise slightly. I'm going to say no. Commissions are what they are. Some people are willing to pay more for a real estate commission to get a higher level of service. Other people are not. I don't see that changing anytime soon. So that is my take on number 12. I think that's an interesting question, and we shall see where that does land. But if you would like to talk about the 2023 market and what it means for you as a buyer or a seller, please give me a call and we will have a discussion. Thank you for watching. Thanks, Emma.
Thank you.